Shaquille O'Neal made more money after he retired than during his entire NBA career. And that sounds impossible until you understand how he was thinking while everyone else was focused on something completely different. Most players spend their careers chasing contracts, chasing endorsements, chasing the next big check. But Shaq was quietly building something that doesn't show up on highlight reels, something that doesn't get talked about enough, something that ends up mattering more than everything else combined. And that is ownership. Real ownership, not appearances, not partnerships where you're just the face, but actual equity in businesses that continue to generate money whether you are working or not. And that one decision, that one shift in mindset, is what allowed Shaq to go from being one of the most dominant players in basketball history to becoming one of the most financially successful athletes of all time long after he stopped playing the game. To understand how he pulled this off, you have to go back to the beginning of his career when he entered the NBA in 1992 as the #1 overall pick, immediately becoming one of the most dominant physical forces the league had ever seen.
O'Neal runs the floor, takes it all the way!
He picks it up, puts it down again, and Shaw very alertly gets out of the way.
Combining size, strength, agility, and personality in a way that made him not just a superstar, but a global attraction, winning Rookie of the Year, making All-Star teams, eventually winning 4 NBA championships and an MVP, building a resume that put him among the greatest players in history. And by the time he retired in 2011, he had earned approximately $292 million in NBA salary alone. And when you factor in endorsements and sponsorships during his playing career, that number moves closer to $500 million, which for most athletes would represent the peak of their financial life, the highest point they would ever reach, followed by a gradual decline as playing income disappears and business decisions start to matter more. But Shaq never viewed his playing career as the peak. He viewed it as the platform. That difference in perspective is what changed everything, because early in his career he was exposed to a completely different way of thinking about money through watching Magic Johnson, who had already made the transition from athlete to business owner in a way that few had done before, building ownership stakes in movie theaters, Starbucks locations, and real estate developments, creating income streams that continued long after his playing days were over. And when Shaq saw that, he realized that the real goal wasn't just to earn money, it was to build something that would continue earning money without requiring constant effort. And Magic explained it in a way that stuck with him for the rest of his life, saying that endorsements pay you once, but ownership pays you forever. And that single idea reframed how Shaq approached every opportunity moving forward. Instead of asking how much a deal would pay him up front, he started asking whether it gave him ownership, whether it could scale, whether it would continue generating income years into the future. And those questions led to decisions that didn't always maximize short-term earnings but positioned him for long-term growth. One of the most well-known examples being his approach to footwear, where after signing with a major brand and making significant money, he encountered a fan who told him she couldn't afford his shoes for her child. And instead of ignoring that moment, he used it as a turning point, eventually focusing on creating affordable shoes that could be sold at scale through retailers like Walmart, leading to massive sales volume over time, demonstrating that reaching more people at a lower price point could ultimately generate more revenue and more impact than targeting a smaller, higher-paying audience. This concept of scale became a consistent theme throughout his business strategy, where he prioritized accessibility over exclusivity, volume over image, and long-term consistency over short-term spikes. And as his NBA career progressed, he continued to educate himself on business, sitting in meetings, observing how deals were structured, learning from experienced operators, and developing an understanding of how companies function beyond the surface level, which meant that when retirement came in 2011, he wasn't starting from zero. He was stepping into a phase he had already been preparing for, allowing him to move quickly and decisively, while others were still trying to figure out their next step. After retiring, Shaq didn't reduce his activity, he increased it, building one of the most diversified and expansive business portfolios among athletes, with one of the most notable examples being his ownership of over 155 Guys locations at one point, which represents not just an investment but a network of revenue-generating assets that operate daily, producing income from thousands of individual transactions. And that is fundamentally different from a one-time endorsement deal, because it creates a continuous flow of money tied to consumer behavior rather than a fixed payment tied to a contract. He expanded further into food with investments in Auntie Anne's, Krispy Kreme, and Papa John's, where his involvement went beyond marketing as he became a board member, giving him influence over the direction of the company and allowing him to participate in higher-level decision-making processes, which is where significant financial growth often occurs. And outside of food, he built positions in fitness through ownership of gym locations, in entertainment through movie theaters and nightlife venues, in real estate through both commercial and residential properties, and in other sectors including car washes and technology investments, creating a wide range of income streams that are not dependent on a single industry or trend. The structure of this portfolio is what makes it effective because it spreads risk across multiple areas while maintaining consistent cash flow, ensuring that fluctuations in one sector do not significantly impact overall income. And this approach reflects a deeper understanding of wealth building where stability and scalability are prioritized over short-term gains, allowing for continuous growth over time rather than reliance on a single source of income that may decline or disappear. In addition to ownership, Shaq leveraged his personal brand in a way that complemented his investment strategy, aligning himself with companies that matched his personality and audience, including partnerships with brands such as Icy Hot, Gold Bond, the General Insurance, and Carnival Cruises, which are all positioned within the mass market and benefit from high volume rather than exclusivity. And by maintaining a relatable and approachable image, he was able to connect with a broad audience, increasing the effectiveness of these partnerships and reinforcing the value of his brand across multiple platforms. His presence in media, particularly through his role on Inside the NBA, further enhanced this effect by keeping him visible and relevant, ensuring that he remained part of ongoing conversations in sports and entertainment, which in turn created additional opportunities for partnerships and investments, as visibility often leads to increased demand and access to higher quality deals. And this demonstrates how maintaining public presence can directly contribute to financial growth when combined with a strategic approach to business. Another key element of Shaq's success is his willingness to collaborate with experienced professionals, recognizing that building and managing a diverse portfolio requires expertise across different fields. And instead of attempting to control every aspect of his businesses, he partnered with operators and advisors who could manage day-to-day operations and provide specialized knowledge, allowing him to focus on high-level decisions and expansion opportunities, which is a common trait among successful entrepreneurs who understand the importance of delegation and collaboration in scaling their ventures. Franchising also played a significant role in his strategy, as it provides a framework for expansion based on proven business models, reducing the uncertainty associated with starting new ventures from scratch and allowing for faster growth with more predictable outcomes. And by investing in franchises with established systems, he was able to build a network of income-generating assets that benefit from brand recognition and operational consistency, further strengthening the stability of his overall portfolio. While many athletes face financial challenges after retirement due to a combination of reduced income and poor investment decisions, Shaq's approach allowed him to avoid these issues by creating multiple layers of income that continue to function independently, providing both security and growth potential. And this highlights the importance of planning for long-term financial sustainability rather than relying solely on earnings from a primary career. Today, his net worth is estimated to be over $500 million, but more importantly, his income continues to grow due to the systems he has built, which generate revenue on an ongoing basis without requiring constant input, illustrating the concept that true wealth is not defined by a static number, but by the ability to produce income consistently over time. And this is the result of the decisions he made early in his career to prioritize ownership and scalability. Ultimately, Shaquille O'Neal's financial success can be traced back to a fundamental shift in mindset, where he chose to focus on building assets rather than simply earning income, allowing him to transition from a high-earning athlete to a long-term wealth builder. And his story serves as an example of how strategic thinking, diversification, and a focus on ownership can create opportunities that extend far beyond the initial source of success, demonstrating that the end of one career can be the beginning of a much larger and more sustainable form of achievement.